And in our top business story, the Dubai Chamber of Commerce and Industry has revealed that Saudi Arabia accounts for 45% of Dubai's total trade within the region. According to the Dubai Chamber report, Dubai's trade within the region is witnessing a higher pace of growth. And according to His Excellency Hamad Bouamim, the President and CEO of Dubai Chamber, Dubai's robust trade ties with the GCC countries highlight its key role in enhancing business and trade activities in the region. Following Saudi Arabia, Oman and Kuwait made up 19% and 16% of Dubai trade respectively, and while Qatar's GDP at $210 billion was larger than that of Oman at $81.8 billion and Kuwait at $163.6 billion, its share of trade with Dubai was lower at 12%. Being the smallest economy with a GDP of $33.9 billion and a population of 1.36 million, Bahrain accounted for the lowest share of 8% of Dubai's trade in the region. Dubai recorded a total net trade of $23.7 billion or 87 billion dirhams with other GCC countries in 2015. The highest net trade resulted from Saudi Arabia for a share of 51% of the total, while net trade with Oman contributed 18%. Trade with Kuwait and Qatar both led to shares of 13% to total net trade, while trade with Bahrain accounted for 5%. India on Monday opened up its civil aviation sector to allow 100% foreign direct investment amid a major overhaul in which it has relaxed rules on overseas investment into several industries. The FDI limit on Indian carriers had previously been capped at 49%. India also allowed 100% FDI in its defense sector and eased rules on overseas investment in sectors including food products, broadcasting, and pharmaceuticals, with the aim to attract more flows of investment from overseas and boost job creation in the country. Etihad Airways bought a 24% stake in the Mumbai-based Jet Airways in 2013 for $379 million after India opened up the aviation sector to FDI of up to 49% in 2012. India on Monday kept this cap for foreign carriers in place, which means that while it will allow overseas investors to fully own an Indian airline, foreign airlines will not be able to increase their ownership beyond 49%. According to reports, the government stated that the changes mean that India is now the most open economy in the world for FDI, adding that the amendments to the FDI policy are meant to liberalize and simplify the FDI policy so as to provide ease of doing business in the country, leading to larger FDI inflows, which will contribute to the growth of investment incomes and employment. And aircraft manufacturer Boeing has announced that it has reached an agreement with Iran Air for the sale of commercial passenger jets in what could be the first major deal between U.S. and Iranian companies since the lifting of nuclear sanctions in January. Iran, who is keen to re-establish ties with Western firms, has been negotiating the purchasing of passenger jets from Boeing since April. In a statement released today, Boeing confirmed the signing of a memorandum of agreement with Iran Air, expressing the airline's intent to purchase Boeing commercial passenger airlines. The statement went on to explain that Boeing negotiated the MOA under authorizations from the U.S. government following a determination that Iran had met its obligations under the nuclear accord reached last summer. The manufacturer added that it will continue to follow the lead of the U.S. government with regards to working with Iran's airlines, and any contracts with Iran's airlines will be contingent upon the U.S. government approval. Earlier, Iran's transportation minister said that a deal between the Islamic Republic and Boeing could be worth as much as $25 billion, with Iran Air looking to buy the new generation Boeing 737 MAX, 777-300ER, and 777-900. A new report has shown that the sale of properties in some of Dubai's prime residential markets have fallen significantly in the first half of the year. According to Coursevel's Q2 2016 established prime residential markets in Dubai report, sales of villas on Palm Jumeirah have fallen 25% in the past 12 months on average, with prime villas worth more than 10 million dirhams dipping 44% year-on-year. The reports revealed tough market conditions for other prime areas in the city, including Al Barari, Dubai Marina and downtown, with Emirates Hills bucking the trend. The research found that while volume was down, sales prices per square feet for Palm villas remained relatively steady, with just a 4% year-on-year drop, as landlords continue to command stable prices for well-maintained and refurbished properties. The area's rental market saw a 7% drop, resulting in a marginal fall in yield levels. In Dubai Marina, sales transaction levels also dropped 25%, while prime apartment sales fell 43%. Emirates Hills witnessed the highest transaction volume among all prime villa districts in the past 4 quarters, at 40% of the city's market. The report added that the sales market at Al Barari saw a 10% year-on-year drop, while the volume of prime sales in downtown fell by 12%.